show you a couple of slide screenshots of how we have integrated it into our system and how you can get it enabled and use it within your process. Okay. So at this time, I want to introduce Joe Melendez, and he's going to explain what ValueInsured is. Joe?
Thank you, Lynn, and thank you, everybody, for participating in today's webinar. Really appreciate you taking the time out of your day. Especially appreciate Lynn putting this together and working with us to really enable the market to take advantage of down payment protection with a very simple process, as we say on the deck, which is really just the flip of a switch. And we'll get into that in a minute, but I'll just talk to you a little bit about down payment protection, give you a little bit of background. You know, today most home buyers are faced with a world of uncertainty, anxiety, leading to indecision, and you know, there are so many problems, so many things that are coming up as they deal with the whole choice of thinking about buying a home. And what down payment protection does is it enables a buyer to basically put all these things on the side of the decision-making process and say, okay, I don't need to think about those things because for the first time, I can insure my down payment against risk of loss. And if you think about it, corporations, governments, investors, they've been using tools to hedge their risk for forever. You know, most notably, Fannie and Freddie have always required mortgage insurance. FHA requires their mortgage insurance, but there's never been anything out there that enables the borrower to protect their risk in owning a home, which is their down payment. And now they have it with down payment protection. And really is this whole concept of, for the first time, being able to buy a home on a risk-free basis. And that's a unique concept, and it's something that today's home buyers are really embracing because nobody knows the direction of the market. What they do know is that the market's had a big run-up, and they're worried about, am I the guy who's buying at the top? And with down payment protection, they don't have to think about that. You know, we use this sign with the down payment protection on the lawn sign as an indicator of how powerful a very few words can be in changing the whole message around the buyer's impression of a property. So just looking at that sign saying, this home comes with this protection, that means I don't really have to worry about the money that I'm taking from the bank that's insured, and now I have that same protection that I can put in when I'm acquiring this property. So down payment protection really changes the whole message around home ownership. You know, we haven't seen any type of innovation like this in the residential real estate market for over 40 years. The last new product that we saw in the market that actually helped the consumer with buying a home was a home warranty. And, you know, granted, people do worry about washing machines and dishwashers, but really their down payment that might have taken them years and years to save up has never had protection. Now we've leveled the playing field and we're giving this protection to the homeowner. And how do they get it? They get it bundled with their mortgage, with a feature of their mortgage. That's why this partnership with LendingQB has been so important, because we needed a way to take advantage of not only innovation in the financial side with providing the protection, but we needed a very simple way to deliver it. And that's something that LendingQB brings to the table for their customers. So just a little bit more about down payment protection. I'm going to go through this quickly. You know, as we talked about, buying a home, overcoming that emotional stress of understanding, is this house going to go up? Is it going to go down? Can I afford it? All these questions that buyers ask themselves kind of go to the sideline, because irrespective of what happens in the future, what we're giving that buyer is the optionality to move and get out of a home if they want to, irregardless of the situation. I don't care why somebody wants to sell. That's not up to us. Somebody needs to move because something occurred in their life and they want to move on and the market's against them. They no longer have to have that financial risk associated with that. We work specifically with lenders, and our lenders work with realtors. It's a hand-in-hand relationship. We want to deliver new, innovative mortgage products that lenders can bring to their realtor customers who can educate the buyers and say to those buyers, here's a new mortgage program that takes the risk away from home ownership. Whether you're a lender or a realtor, what you're doing is you're redefining your value proposition to that borrower in buying that home. You're saying to them, hey, look, I'm not just about points and rate. I'm not just about trying to close a deal. I'm about trying to make sure you get in the home you need and want today and that you can get out tomorrow. I'm really about being your trusted advisor. Now, as we've gone through this process, obviously when we're helping a consumer avoid a stressful situation, if the market's against them, what typically happens? Either they walk away, they default on the loan. Well, those aren't good things for the industry. But because we're now providing this protection that says sell, well, selling in and of itself means that they're not defaulting, which is actually good for everybody else in the industry. It's good for the originators, it's good for the mortgage insurers, it's good for the GSEs, Fannie, Freddie, FHA, and it's good ultimately for the capital markets. This product is very consistent with what the FHA has said that they want to do with respect to risk transfer. So again, helping the consumer solves a bigger issue across the entire industry. Now, when you're starting a new product like this, and we've now been out in the marketplace for over a year, we have over 12 lenders offering the program nationally. We're on retail, wholesale, and correspondent. But before you get there, you actually have to do a lot of research. You have to understand, do people want this, right? You could have the greatest idea in the world, but if we don't know that people want it, then it's going to be an effortless type of exercise. So what we have here, what I'm sharing with you now, the next few slides, is we produce research on a quarterly basis. It's our ValueInsured Homebuyer Confidence Index. And we publish this regularly. It's on our ValueInsured Trends page. So you can go to our website at ValueInsured.com and see our research. But, if we look at our most recent research, this slide says 83% of homeowners believe it's a good time to sell. That's a very powerful message because what it also implies is that it's not a good time to buy. Well, this is why we're having a bottleneck. We hear about short supply, and it's because we've had a rapid run-up in price. We know that people can sell. Maybe they can buy, or if they're buying, they have to pay a lot more. And this gets to that question, am I the guy who's buying at the top? And i.e., if you have down payment protection, that doesn't really come into the equation. Again, talking about the top of the market, this is our response, 61% are worried about where we are. Are we at the top of the market? 63%, more importantly, among millennials, are worried about this whole issue about market timing. Again, what we're trying to say is we're not trying to predict the market. We're not trying to predict market timing. What we're trying to do is say, take it off the table. Don't have it be part of the consideration because you're protected. Finally, we always have this question of, what do people actually believe? If they buy a home today, everybody wants to believe that that home is going to be worth more tomorrow. Well, that's not the case, okay? We're seeing that only 48% have confidence that it's going to be worth more. It means the majority, 52%, think that if they buy a house today, the probability is going to go down, not up. That's not positive for home ownership. And then finally, the big question is, will people pay for the coverage? So we always ask the question, yes, this is great coverage, down payment protection. What are you willing to pay? And what we know is that the consumers are willing to pay up to $21 a month for $100,000, for every $100,000 of mortgage value. So again, we're well within this price elasticity testing that we've done. So let me just take you through a quick example of how it works. It's really simple. We're insuring the down payment. So somebody who's buying a house for $300,000 puts down $30,000. 5 years from now, they go to sell the house. The most they can sell it for is $280,000. We have a $20,000 difference in the price. We know that we insured $30,000, and we have one other number called the FHFA index, and this one always gets everybody confused. But we don't go out and look at appraisals and do inspections and do all kinds of underwriting on each house. What we look at is what was the value of the FHFA index on the day you bought the house and on the day you sold the house. And all that's acting as a moral compass to say, am I dumping the house just to get out of it? Or did I not maintain it? Or, whatever the issue is. So in this case, the index actually went down 15%. It was down $45,000. We know we actually sold the house for $20,000 less than we paid for it. We insured $30,000. So we're actually going to cut the consumer. Again, very important. We're cutting the consumer a check for the full $20,000. It's important to remember, if we look at other programs like Loan Depot, for example, has disability insurance. They have unemployment insurance. There's all other kinds of programs out there. All of those programs, the check goes to the lender. Down payment protection is the only product in the market that the check goes to the borrower. So again, we are focusing in on that borrower. We're making it easier for them to pull the trigger to buy a house because they now have that same flexibility that they would have with renting, with owning. Again, we've worked very closely with Fannie and Freddie, as I mentioned earlier. Today, we're actually on Freddie Mac's My Home website, where you see the two captions, pros and cons of home ownership, understanding your down payment options. There on those websites, it says, ask your lender if they offer down payment insurance. So again, just continuing to show what the value proposition is. And finally, our messaging is very simple. To the home buyer, as I mentioned earlier, we want to give them the flexibility of renting and home ownership. We want to have owning a home be fair. We want to have the modern home buyers feel like they are taking advantage of the best-in-class opportunity to be a homeowner. And ultimately, we're changing the risk dynamic. They really do have the potential to own a home without the risk that were inherently embedded in home ownership prior to down payment protection. For builders, we have a very simple marketing message. I build a great home, I provide a great warranty, and now I provide financial protection. I check all the boxes. You need not go someplace else, buy this home. So it's a very strong message. Realtors, the whole thing of going and being the trusted advisor, not the person who's just hawking a listing, but the person who's actually making a difference by providing a message that says, I'm looking out for you, not just today, but tomorrow. And then finally, on the loan officer side, it's changing the narrative beyond points and rate. There's always going to be somebody who's willing to sell a loan for a cheaper price. What we're trying to do is change that narrative to say, look, you may be able to go down the street and get a cheaper rate, but you can't get down payment protection because we're the company that offers it. So finally, this is a product that home buyers want. Realtors want it. We know we've had tremendous success in the channel to date. We've had many relationships that we're able to develop with realtors because they had people who didn't want to talk to them before, now welcome them in. We're restoring confidence in home buying, especially in a market where prices in some markets are very overheated and people are concerned. And ultimately, it is a product that does a social good. Now, with any new product, the difficulty with bringing any new product to market is every loan officer, every mortgage company, they have a whole list of items that they want to get done that all wrap around technology. Well, we recognized this very early on. And when we started working with LendingQB, what we saw was a terrific platform. Working with Linn and his team, he's really made it the simplest application out of everything, out of all of our relationships that we have today, and we have them with Encompass and Optimal Blue and other companies. Linn has the best solution. His solution is basically, just like the front page said, it's one click. You put the loan information in, and Linn will take you through this in a second, and you just hit one switch and you get rated. So it's a very simple process. So I am going to, let's see, Linn, I'll get this back over to you and let you take the people through the screens. Wilson, how do I do that?
I think you should just click on my name.
I got it.
Click on my name. Okay, perfect.
Hold on. I got it. There you go, Linn. You should have it.
All right, excellent. Okay, so, well, I wish I could say that, what Joe is saying is, about our integration is hyperbole, but, honestly, it's not. So I'm going to just show you very quickly how you actually access, how you, get it enabled first, right? I mean, after you get that relationship with ValueInsured, okay, you have to contact your account manager, okay? And so all of you as clients should know who your account manager is. If not, you can just email me. But you contact your account manager, and what we do is we enable the product via the software automation engineering team, right? The SAE team. And so for you, those of you guys that are paying attention, right? The SAE guys, those are actually the guys that handle the Price My Loan pricing engine, okay? And that's what makes this integration kind of unique, right? In fact, it's not even technically an integration that you guys may be used to seeing with us, right? I mean, with other services, that we use our APIs and we do these different web service call outs to send data, get back data. With ValueInsured, okay, Andrew Yoon, who runs our SAE team, when Joe first presented this to us, he recognized very quickly, right, that the way that ValueInsured was actually generating their premiums was very similar to a rate sheet, right, or more akin to like an MI rate card, right? So it was a table of fees. And so Andrew is the one who actually recognized that we could actually incorporate ValueInsured premiums directly into Price My Loan pricing engine results. Okay, and so that's why it's actually enabled by the software automation team. One other thing that you're going to need to request is that, and it should, go part and parcel with getting it enabled through SAEs, is there is a specific report that needs to be also generated to be able to track the transactions for ValueInsured. Okay, and so this report is enabled by our CPE team, and it is a report that is submitted 2 times a month directly to ValueInsured. Okay. And the last thing I want to note, because we were able to get ValueInsured premiums to show up within pricing in Price My Loan, what that means that you can actually push out the product, right, the availability and the pricing for the product through both the consumer and the TPO portals. Okay, and that's huge, right? So it's not just an issue of that, only your internal staff can actually run pricing, with or without the DPP included in the pricing. No, you can push that directly out to your direct customers, right? And so from a marketing standpoint, that really enhances your ability to raise the visibility of the DPP product. And again, that's really a lot of what this is. I mean, it is about differentiating yourself from other lenders, okay? So as you can see here, it's really just dead simple, right? You can see in the background, this is, the standard screen for Price My Loan. And when we enable DPP in your account, at the bottom of the product, there's a little drop down that just says, hey, do you want to turn on lender paid down payment protection or not to be included in your pricing. And so we actually then access, basically a table that Joe's company provides to us. And so when we run the pricing, we access the table and we include the premium for the pricing of DPP as basically, an adjustment to the price. So it's already included in calculation for the interest. When you go, even before you go to, register the product or lock it, right? You can see that when you turn on the DPP, okay, you can, but there's this supplemental information pricing, okay? And if you scroll down further in the loan certificate, you can see that we will display out the calculator pricing direct. It's listed right out as a point, okay, and we give you the description as a DPP and the group that we are able to identify that it's in. So in this context, it's not really a direct sort of integration. We were able to premium directly into Price My Loan. And of course, as you register the product, okay, within secondary marketing, here you can see that this is the front end rate lock page within LendingQB. You'll see that when you register it, okay, or you request a lock, that for the DPP premium comes directly over into the secondary screen. Okay. And so again, I mean, we feel that this is a very innovative way, not value insured and innovative product, but it's a very innovative way of, I guess, expressing this product, right? I mean, the run your pricing and to have it automatically built into for the the aggregate sort of interest rate calculation is really what makes this unique. Okay, I think what would help, Joe, is you don't have to name names, but I mean, if you could kind of explain, well, how are other LOSs accessing DPP or value insured within their systems, right? What is the difference between the way that we've done it and the way that other systems have integrated it, and what are the benefits?
Well, the most obvious is that there's no integration with you guys. Anybody that's working on LendingQB, it's already done. Most of our other clients, and like I had mentioned earlier, we have 12 other companies up, on national. We're using various other platforms. We have to figure out how to do what Linn did, and it's multiple steps, and it's much easier for adoption, and that's why we're really excited about having new partners join us that are using LendingQB, because it's better for us, it's better for the partner, it's ultimately better for the clients. So this has made it really, really easy, and we're hoping that working with LendingQB is going to allow us to bring more partners into our program to bring down payment protection to their customer base.
Right. The other sort of benefit, right, that we were able to kind of, price my loan, is that, again, being able to have this available on the consumer portal, right, and also have it available at the broker level. Now, our right, I mean, as you guys know, we have a number of parts on the point of sale side, Blend or Flowify or whoever that we're already integrated with, and just add that to the API and say, hey, we have, some sort of tool that's available that you can express within your point. So, if you imagine that, or stream mode who have, these mobile install leverage price. I mean, now, you can really understand how we're creating this work of services and products that in, anywhere or at any time in any sort of form. I mean, in terms of actually putting this up and getting this, actually a workable solution, I'll be honest, it probably took Andrew probably a matter of maybe a couple of hours to actually have this be in work environment, which is amazing, right? As you guys know, most of our integrations that we're using, right, to get an integration up and running. So, again, kudos to Andrew for identifying that, this DPP product could be actually integrated directly into Price My Loan and do it in a very short amount of time. So there's multiple sort of benefits to you guys. So, do we have any questions, Wilson? I'm just kind of curious. I'm not actually able to see the questions, but do any of the attendees have any questions for either Joe or myself?
I have not seen any questions be submitted yet.
Okay. All right. Terrific. So in any case, I think, this is a very innovative product, right? And from the standpoint, when you're looking at the market that we're entering into, I think the data is pretty clear, right? Interest rates only have one way to go. Home values, obviously it varies according to, your regions, your localized regions, but, many people do consider that home values are reaching some sort of a peak. I think this is, and again, as a lender, a very tough environment to be in as a lender. So finding those types of, edges that you can have over your competition, right, to attract borrowers to consider you over someone else. I mean, ValueInsured really does provide something that is very different, that, is very appealing to consumers. And I think it's something that, all my clients should really take a look into. Joe, do you have any other comments that you want to make?
No, if anybody wants to reach out and, after the webinar, we're happy to take any questions. Any questions, we're happy to take questions. But please visit the website for ValueInsured, learn more about down payment protection. It's ValueInsured.com. And if anybody wants to call, is 214-432-5572, 214-432-5572. And, again, we look forward to working with both LendingQB and their clients and bringing the down payment protection to the market. So thank you. And if there's any questions, happy to answer. Please, don't hesitate to ask.
Yeah, Joe, do you actually have a slide that shows all your contact information?
I don't, but we can send one. We can send it around. We'll send out an email.
Okay. Yeah, not a problem. Not a problem. Okay. All right. Well, very good. Well, again, thanks everyone for joining us today. We hope you, got a lot out of this presentation. Again, I think there's just a sort of a lack of awareness right now, but as time goes by, I think you're going to see more and more of ValueInsured's products being mentioned. I know that we do have a couple of clients that have already signed on with Value. So if any of you guys have any questions or want to talk to those clients, see what they saw in ValueInsured or want to see, what type of success that they're having with the product, feel free to reach out to me. I can get you in contact with them. But overall, we're very happy to work with Joe and ValueInsured. We're looking forward to a great partnership with them. And any other questions, feel free to reach out to us. We'll be available to answer any questions or issues that you may have. And again, we will also post a recording of this webinar for you guys to view at a later point in time. And so we'll reach out to you guys via email to let you know when that is available.
Okay.
All right, very good.
Well,
thanks a lot, you guys.
Thank you, everybody. Bye.
Yes. All right. Thanks, guys. Have a great day. Talk to you soon.
Okay.